Hi, this is JD Henning at Value and Momentum Breakouts. I'm going to give you a 4 chart overview. I'm going to keep it short of things to look for next week. And the first chart we're going to look at is the SPY S&P 500 Index Fund. And what we have here is the S&P 500 is down 17% year to date from the highs in January. And some technical overlays. We have 2 channels that have basically formed so far this year. And I'm going to give a little bit more detail on what we might expect in the months ahead. You can see that the topping signals from the momentum gauges are shown with their dates. And we have some recent positive breakout signals, the most recent one on July 19th. And this one has strong similarities to the breakout on March 16th. You can also see it on the technical indicators where the money flow picked up and turned very positive. And you can also see it on the channel chart where the S&P 500 broke above the negative channel from January. And then most recently it broke above the negative channel from April. What we want to see is a continuation of those patterns. And what may happen, we did have a pullback today. And what may happen is it'll continue up this channel towards a target at the next resistance around June highs, which is roughly 410 or 415 on the SPY chart. And it could, depending on all the activity next week, it could show a continuation. We had a little dip back here in March, and then it went up to the highs around 460 before going into another negative channel. So there's one possibility to look for is that this continues a little bit higher and then tops out around the 415 level. We will see how that goes next week. The next thing I want to consider is the seasonal returns. This is a chart showing the monthly returns of the S&P 500 from 1927 through January 2022. And what's important about this chart is that we are in the decline period from July to September, which marks September is the worst performing month on average by far. And that's been fairly consistent over many years. But what's interesting this year is it also corresponds to the Fed's QT program. So the quantitative tightening began in June and is continuing through August at negative 47.5 billion. That reduction generally puts a little strain on the market and could contribute to more declines. But what's interesting is that the Fed schedule is planning to double the QT in September, which could also follow this September pattern. And it tends to do very poorly over time. So that's something to consider based on this long-term historical pattern. Okay, next I want to show you one of the top stocks in the negative forensic July portfolio. GTHX is up 58% from release to members on July 1st. And it's part of a portfolio that's up 16.9% for July. You might remember that in a prior video I showed you Beyond Meat, and that's up 41% so far for the month of July. It has broken, GTHX has broken the $8 a share resistance level and could move higher to $10 a share. A couple things to look out for is that the indicators are starting to get into some overbought levels here, which tends to increase the risk of profit taking and some sell-offs. And also there's symmetry in these charts. So you'll notice that in this decline here between the $8 a share and the 6, it was pretty smooth. And the return back up was also pretty smooth. But what may happen, and something for us to consider, is it gets a little bit more choppy in the trading range from $8 a share to $10 a share. So look for some symmetry in that area up here that looks very much like the March time frame. It could get choppier. And lastly, I'm going to go over the semiconductor bull fund. It's done very well this week until Friday, we had a bit of a sell-off. You can see here. Again, this is something to look for next week, as the CHIP Act is going for a vote and could be signed into law next week, adding about $52 billion to the semiconductor development in the United States. But one of the concerns I have is that we're seeing a little bit of a topping signal in the technical indicators that corresponded to prior tops, and that's something we want to watch for in the coming week. Again, the money flow is quite high, and again, it corresponds to some of the prior tops. So those are the main charts I wanted you to see, and I hope they help you next week. Wish you all the best in your trading.